The Road to Housing Act was introduced by President Trump in 2026, and it's currently being moved through Congress. And the final version is still yet to come out as of right now, which is June 2026. But one thing is clear. It will get passed because there's been large bipartisan support, and the intent of the bill is to limit institutional investors from investing more in single-family homes, and it will also affect new construction build-to-rent or BTR communities. So there's three different effects that I see that's going to happen as a result of this Housing Act. And it's something that investors should not ignore because it's one of the most sweeping housing legislation bills that have taken place in the last probably 30 to 40 years. So the first thing that I see taking place, and to be clear, these are my observations or what I think will happen. Of course, everyone should pay attention to this change in law and make their own observations. But the first thing that I see happening is that institutions, which are defined as an entity that owns 350 or more single-family homes, those institutions, because they will not be able to purchase single-family or townhome development projects anymore, they're going to pivot back to traditional apartments. What this means is that likely it will have an increase in demand for apartments because they will be absorbing all the capital that previously was flowing to build to rent and single-family rental communities with this institutional capital. So I think there's going to be an increase in demand, and there's going to be more capital flowing into that market. So if you're an investor, it probably means that your apartments are going to increase in value. The cap rate's going to go up, and you can expect that there's going to be more competition out there in the market. The second thing that I see happening is that there's going to be less build-to-rent development. So behind me, you see a community that is new construction development. And previously, a lot of communities, if they were townhomes especially, could be either built to sell to homeowners or built just to rent because there was a lot of demand for rentals. But because of the limitations on large institutions purchasing single-family / townhome communities, a lot of these communities are probably going to pivot back to being for sale communities, which means that those product types are going to be less available for investors, and there's probably going to be more opportunity for home buyers. So what this means for you as an investor, if you own a whole bunch of townhomes or single family homes that you're like, hey, I'm thinking about selling them off to homeowners, it's likely that as more product comes to the market for homeowners, the prices will get pushed down for owner occupants. So if you are thinking about selling some of those single family or townhomes within the next couple of years, it'd probably be better to do it sooner rather than later, because the result is that more product available to homeowners, the prices will probably get pushed down. And that is exactly the intent of this legislation, is to make housing more affordable for owner occupants. So the intent hopefully will come about. So you as an investor should be aware of that and prepare for it. And the third thing I think is going to happen is that there will be more apartments built instead of townhomes as a result of this. So previously, if you had land that was zoned for a high density residential use, a lot of developers would look at that and say, okay, is it better if I build townhomes? Maybe it's better if I build apartments on this land. Which one is going to yield me a better return if both of those can be rented? But what this means is that if they have that choice, they're probably going to pivot back to the apartment side and as a result construct more apartments. For renters, this means that they will probably have less options. So this is the unfortunate side that will hurt renters that appreciate having those options to rent as townhomes or single family homes. They will be limited in their options to either renting an apartment or buying a home if they're even eligible. So that will limit renters' choice, which is unfortunate. But if you're an investor, the upside to you means that if you have townhomes or single family homes as part of your rental portfolio, there's probably going to be more demand for that product type because there's going to be limited inventory coming in for renters. So if you're a long-term hold on that type of product, you can expect that your rents are probably going to go up as product is limited. Now, this, of course, is going to take years to play out, as legislation often does, and it trickles down and absorbed by the capital markets and different investors and developers in the arena. But those are the three effects that I see as part of the Road to Housing Act that is definitely going to get passed. It's just a question of what the final version is going to lay out as far as the details and rules in that regard. So hopefully this video brought you some value. If so, please like, comment, and share. And if you're looking to invest in real estate in Pennsylvania or Maryland, please reach out to us. We're always happy to help.